Hello, active traders, and welcome to our Trading Week episode for today, Friday, October 10th, 2020. Great to see all the traders here. As always, all information is for educational use only. I'm not making advice about to buy, sell, or hold, and by watching this, agree to not make actual trades. So let's take a look at our charts and see what's in motion. Best breakout chart, or at least one of them today, is GameStop. I had good news yesterday, and I called it long for members to go long over the 1360 long trigger, and that was hit earlier this morning on the cut pattern breakout right here. So that's where I said to go long. Now would trail a stop at 14 if you're long. Another good winner from yesterday that continued on up today is Canopy Growth. Apparently, with the certain political people saying that they want to legalize marijuana, that led to a big rally in the pot stocks, and that's along with precious metals like silver and gold and energy and solar and oil stocks are all up nicely. Anyway, Canopy Growth really ran up yesterday nicely. I called it long in the low 16s. I don't recall the exact trigger, but somewhere down under 16 and a half. I said we'd look for a breakout long, and it sure enough ran all the way up into the close near 1760. Today it's kind of cycled up and down, but the pot stocks have shown remarkable strength as they've taken out new highs. Another interesting chart is RKT. And we'll see if it breaks over 2340, it'd be a long trigger. It had a good day yesterday and had a good pre-market this morning, but it basically just gapped and crapped. It gapped up and sold down for most of the day. A good long signal would be above the previous day's high at 2340. Experienced traders could scalp in here at 2380 or 2285. If it breaks 2285, we'd go long and then use a hard stop at say 2250. That's when you're trying to bottom fish. You always use it based on the day-over-day trading range. It's ran down as far from its highs today as it ran up yesterday off its lows. So that makes a trading range price extension. So if we bounce over 2285, it might be good for a pivot long. If we take a look at the market, it did finally rally after a weak open. We had a gap up that sold off pretty much all morning and a reverse course later around 10:30 or so, and it ran on up here to just over the 347 in our current markets. We got a long bias market as usual. One thing you want to pay careful attention to moving into next week is key support and resistance in the S&P. I use the spiders, but you could use the S&P. The question is, do we hold above the previous resistance here at 345 or so? So does it break out or fake out? We're in a breakout and it's been running up for several weeks and no reason to expect the buying will slow down until we reach previous resistance. It'd be right near the 3600 mark in the S&P or the 360 in the spiders chart. We want to go into inverses or / go short, or for options trader buy puts in the spiders and all that if we get under that support line around 343. So that may attract new sellers. Hey, Robert. A good point. The trader is talking about Oxycontin. Anyway, the OXY chart. But anyway, so markets big picture forecast for next week. We still have a long bias until we don't, right? So if we lose 344 or so, or 3440 in the S&P, that would be a sign for some selling pressure, profit taking. But the market's still up. So really nice breakout. It may well continue into the close. We might get an all day long rally on Wall Street, or at any point in time, it could crap out and go back down again. So my fingers on the trigger with my inverses in case I get a little bounce. SQQs. I bought the 85, but I'm going to stop out at the 60. You can learn a lot from a trader about how they manage exits and how they manage stops. So I took a speculative bounce attempt at 2185. It's still alive, but on life support because it's down at support. So I bought it right here on the first sign of a bounce with a 2185. That's the only trade I've done in this thing today. And I've got a hard stop set down at 21.6. Now a bad trader would have a really big stop, much lower down at 21 or something like that. You don't want to give it much wiggle room. So I'm only giving it that's a 25-cent stop loss on a $21 instrument. So that's reasonably tight for a good experienced trader. You want to use anywhere between 20 and 40 cents as stop losses for stocks and ETFs in the $15, $20, $30 share range like I like to trade. Now, if you're trading cheap stocks, you have to use under $10 stocks. You have to use like 10 and 15 cent or tighter stops, depending on the share size. One of my traders had mentioned SLV this morning, and it looks poised for a breakout. Long would be fine over 23.10. And not a trade recommendation, just a technical trade setup pattern to get long over a whole number breakout up at a new high. So SLV, the trigger would be 23.10. Our gold ETF GDX ran up a bit, but it pulled right back. I'd be looking for long anywhere over 40. A pivot long in this chart would be long at say 40.05. You put your stop loss right here at 39.80. JMIA was a nice momentum runner. My long call for members today was at 1080. I had him sell near the 1160. I think it was, or 1140, somewhere up there. So it ran nicely for our members. I think it was 1140 or so. Anyway, that was a good round trip, 1080 to 1140. A new long would be indicated anywhere over 11, say like 1110, with a hard stop of say 1070. I just got a fill on this. 1707 I bought. I like this for a pivot. I don't like the fact that the trend is way down at 0.6, which is bullish, and that the market's trying to bounce a bit. But speculative long, I just got a fill. I have a hard stop at 1680 on this. So I will stop out and take a small stop if it drops down. If it keeps going up, I may scale in over say 1740, 1770. But the market's really strong to the upside today, so that probably is not going to end well. Just like my SQs is probably going to take a little stop at 2160. I bought 85, I'll sell 60. So when you fish around for bottoms, use tight stops, play it safe. Now uptrending charts, SPXL is a good example. My long call had been 58.30 for anybody who's following it. $58.30 was my long call. I would use a break-even exit on it, and I would be scaling in over 58.7. So it's kind of a skeptic's trigger because it was way up here in the sky, but it worked out. So 58.30 is in the money. Might be okay to scalp out of a little bit of it here for a small move. Small profit and trail a stop at break even at 58.30 on the rest. Next long would be 58.7. So this is how to play the stock market long, or at least how I like to. SPXL or TNA. Now, despite the market rally, don't be surprised if we get a reversal. say on Monday. Typically, it's really a dumb idea to hold stocks over the weekend in a volatile election season where there's, any bad news could make the market tank on Monday. So it's probably a foolish idea to hold stocks into the weekend given this market situation, because it's a very volatile market. Remember how fast the market crashed a few days ago on Trump's tweet, right? The market's just one headline away from a downside reversal. So it does make sense to day trade good directional breakouts to the upside for long bullish breakouts, but just day trading. It wouldn't be a smart idea to swing trade equities in the next week, unless it's in one of the strongest sectors like gold, silver, solar, oil, energy, pot stocks recently. So the point is, if you do trade stocks into a weekend hold, make sure they're in one of the current dominant industry groups or sectors that have been getting a lot of relative strength or institutional money flow, like gold, oil, energy, solar, and as of yesterday, the pot stocks after the presidential debate. This may be good for pivot long. Again, not a trade recommendation, but over say 1720 and again 1740. Now I bought a few minutes ago at 1707. And I've got a hard stop at 1680 on that trade. And I may well take it out. Won't be the first time, won't be the last time. Always look to cycle, make a series or a sequence of trades. So I took the shot at 1707 because that's the first trade I've taken in this thing today. The reason to illustrate a chart pattern for you guys is that's an ATR based pivot, an average true range, where basically it's sold down as far today as it sold down yesterday. The yesterday high was pre-market was 1940 down to around 1840, about a 1 point range. Today is around 18 to 17, about another 1 point range. So because we're at the edge of the ATR, that's the technical justification for why I went long. But I still put a tight stop on it because nobody says that the market has to do what it's, it doesn't have to follow your patterns. It's a real pleasure and an honor to teach so many traders in my live room Monday through Friday. And we do now run it Monday through Friday. I used to run the room just Tuesday, Wednesday, Thursday, but with enhanced volatility and by popular demand, I expanded the room coverage. I've been running Trading Open for over 20 years now with thousands of traders trained. And one of the reasons it's been popular is I do a lot of in-person live entry and exit calls and coaching and answering questions and all that good stuff. Hey, Will, let's FSLY. Let's take a look, man. Hey, that reminds me, how's FSLR? That was one of the solars. I just remembered that. I don't know about FSLY. Market may drop here. Foxtrot, Sierra, Lima, Yankee, let's see. Yeah, that's a great chart. It looks good, but it's a little expensive. Personally, I'd be hitting a new long at, say, this is a straight momentum play would be at, say, 127.30 or so, 127. I'd go long at 127.30, use a hard stop at 126, or short a loss to the 125, say 124.7. So those would be my specific triggers. I always provide, not trading advice or recommendations, but my own 2 cents worth. I'd go in somewhere over 127, like 127.30, 127.40 is fine. Or if it craps out and goes down under 125, I'd hit the short at say 124.7. But yeah, it's a good chart. Yeah, that is tradable. Well, thanks, Robertson. I really like the way you trade, Ken. It's about the perfect speed for me. Good. I tend to run fast for most people. Smart people can follow me, and experienced traders can follow me because I like to run this like a Wall Street squawk box, my live room. I'm not like, okay, now look at the MACD, and there's a VWAP line. The VWAP line is telling us some magical. No, all we care about is price action with tape and trading ranges and volatility. My 1707 entry is starting to work out. Again, new entries would be 1720, 1740, all with the hard stop of 1680. Because we're at the edge of the trading range, and this thing looks a little overcooked. Now, 1707, maybe that was a bad buy. You know, maybe it craps out. I'll take my lumps like a man, right? I always do. I got a stop loss set at 1680, so that's a total 27-cent stop. That's only a 70 share trade. I didn't do a round lot on that one. I just did 70 shares because it's counter trend. So counter trend, I tend to trade light because they tend to bite. But if it does keep going up, that's a good inverse play. S triple Qs may crap out. I bought 2185. I've got a hard stop at 2160. That's as much as I'm willing to give it. I'll rebuy later. I still like 2185 as a trigger on this chart. Now, if it craps out and goes down to 2150 or 2140 or 30, I may buy it if it bounces over the 21.5. Or if it craps out and goes down to 21, may get an end of day short squeeze and a spike up. So I may often, the inverse is if they sell off in the morning, they come back to life, if not between 12 and 1, between 3:30 and 4, because at least you get some shorts covering at the end of the day. So you get a short squeeze. So I'll take a $25 hit if it goes down. I only bought 100 shares at 21.85. It looked good at the time. Now, not quite so much. On the upside, the SPXL alert was 58.30, but it's slowing down up here, so I'd use a break-even exit on that. TISA, I was in earlier this morning at 13.10. I sold at 13.15 because it didn't ever take out new highs after that little initial run up to the 13.30. So I'm going to rebuy this at 13.15 with a protective stop at 12.80. The good thing about this market rally is that it kind of resets inverses down at support levels. So if you believe, as I do, the market may at some point sell off, given all the negative news out there, these guys make sense. NASDAQ still in a downtrend. Technical long triggered be way up at 1660 because that's right above the prior day's low, right? So you could fish around for a bounce down here at say 1645, but I'm personally going to wait for it. I'm not going to overtrade something that doesn't have a big range. Much superior chart for bounce might be this one if it comes back to life. I bought 1707. We got a hard stop at 1680. I'll rebuy if it gets back over that 1707 if I get stopped out later. We take a look at some of our best up charts on the day. GME was a nice runner into yesterday's afternoon. There's some positive news. Sold down a little bit in the early portion of the day, but got its groove back and started to get some buyers. Canopy Growth was a really good runner for us yesterday. Today it's kind of chopped around, but the pot stocks are all up nicely over the 2-day chart. Trader had asked about FSLY. And I'd use 127.30 as a long call. Again, not a trade recommendation, but if my life was on the line, I had to make money trading this thing, I'd use 127.30s along with the stop at 126.50. So no more than like an 80-cent stop on this, or short it if it loses 125 later, it's say 124.7. Speaking of pricier instruments, Apple's trying to get new highs here. It's got a triple top though at a 2-day high. So this one I wouldn't be interested in going long until it gets over say 116.7 or short to 115.7. But Apple did have a nice little swoosh to the upside. It was gapped up, then it pre-market ran up, then ran down, then in market it ran back up again from 115 to 116. It only has, a relatively compressed range, only a $2 range on the 2-day chart, which is not enough leverage. So that's why I don't like Apple, because you got to pay a lot per share, and it doesn't give you the same range as some of our more volatile instruments do. GameStop was great. Curious why brick and mortar game stores are still in business, but more power to them. I guess they're making something work. So it's a nice breakout. For the fellow gamers out there, you got to be aware of the, what's it called? Cyberpunk 2077. New release next month. Anyway, game on, taking out new highs. We're in the midday doldrums, though, the choppy price action of the middle of a Friday. The market's still trending up surprisingly strongly, given all the negative world news out there and unemployment numbers and all the, but the market doesn't care. It goes up despite that. So nobody accused the stock market of making sense. All we care about is price action. If it's going up, we buy it. If it goes down, we sell it. Anyway, spiders are holding their own up here. Next technical resistance is 347.40. Now I would use 346.80 as support. So I'm going to scale into inverses a little more aggressively if we lose 346.80 and trend back down. If we have an A-shaped, we had a V-shaped recovery earlier in the morning, that little V that you see. We want to see if it continues on up or if it makes an A shape and like a sine wave and cycles back down to 346. But so far it's strong long bias. Market's up sharply. The ARMS index is at 0.65, so the trend is still bullish bias. All right, well, I wanted to thank you all for being here. I'm going to wrap up now. Our time is at a close. We're at 12:23 in the afternoon, and these are scheduled for 20 minutes just to get my thoughts on the market and hopefully give you some insights in terms of my own trading approach. If you do want to join my live room, it's available money back guarantee on the trial if you want to try it for a few weeks for just $7 at www.tradingopen, training thousands of traders since the year 2000 in my live training session. So anyway, tradingopen.com. Have a great weekend. Do be aware the market is on, despite the strength of the market, it may well be a bull trap. I mean, as long as it keeps going up, it's a long market, right? But because of all the fundamental problems with the economy and the pandemic, I have no idea why the market's going up other than more buyers than sellers. And as a trader, that's pretty much all we care about. But the market's kind of rich now, and it may well be time for a pullback or a reversal. So now is a really opportune time to be considering inverses either for day trades and swing trades like I do, or other strategies. So join me in the live room, and I will wish all the best for a great weekend. Take care. Thanks for being here.